Good morning, gang. Good afternoon, good evening, good night, depending on where you are in the world when you are watching this. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor. This is just for educational purposes only. And now we've got that out of the way. Since our last public video, we've had a 17% pullback. Okay. So a lot of people obviously had a lot of fear in the market when we were having this pullback because it was fairly aggressive in the grand scheme of things. So today I'm going to talk through what I'm looking for next, and I'm also going to talk about one of the trades that we took in the group to basically capitalize on this move down. Okay, before we get into that, first and foremost, remember we have today's video sponsor, which is Prime XBT. If you don't know who they are a non-KYC exchange. And if you do use our link down in the description, you can get up to a $7,000 deposit bonus. The beauty of these guys is you can not only trade crypto on there, but you can also trade Forex, commodities, and stock indices. And it's one of our 3 preferred exchanges. So if you do want to check them out, link down in the description below. Right, now that's out of the way. Let's jump into the chart, shall we? Right, I'm going to try to keep this as quick as possible because I've got a hell of a lot of stuff to do today, and I also want to trade this. So, going back to our last public YouTube video, I was warning people about this zone above our head. Okay, so that little snippet from last week's video. I'm not going to bother playing the video because if you want to go watch that, you can do, no problem. But I had this red box. Okay, so this red box was based on a few things, mainly based on a fib extension, an Elliott wave count. In fact, 2 Elliott wave counts. And it's effectively the last major sticky zone, even though this is all-time highs. Obviously, we had the breakout of all-time highs going back from, obviously, back in 2021 when we had the 69k all-time highs. We had the breakout. Obviously, so far, it's looking like a deviation. Now, a lot of people, once again, are going to get really doom and gloom about this and think, well, it's just one big deviation, and we're going to go down and make some brand new lows. Could we do that? Yeah, of course we could. Could this just also be a simple deviation and then we come back up and continue? Yeah, of course. Again, we're not here to have a crystal ball and predict what's going to happen next. We're just here to trade the best setups. Okay, so obviously that's following from last week's YouTube video. Now, from that, in the group, we had some plans. Now, obviously, the actual trading plans that I share my daily trading plans every single day of the week. And then we also have our swing trading plans. And one of the plans we were looking at is coming into that exact same zone, so let's bring that zone back on, was looking at a very simple diagonal. Now, a lot of people will look at this and go, Spitty, I thought you don't like pattern trading. And I don't like pattern trading. However, a diagonal is derived from Elliott wave theory. And this is where it's good. It is a very good pattern to figure out something that's starting or something that's ending. Now, if you know how to trade using Elliott wave, then it gives you the best possible outcomes when it comes to trading. Okay, if you are just trading a simple pattern like a lot of people do, especially in a bull market, you'll see a lot of influencers going, "Oh, we've got a triangle. Look at this triangle. Trade the breakout." And we've said time and time again this channel, you get a triangle, you get a breakout, it fakes out, and then it ends up reversing. Okay, everyone longs the breakout and then gets absolutely destroyed. Okay, same thing happens with patterns like this. However, when a pattern like this ties into Elliott wave theory because it's a true pattern, then you can trade it. Now, once again, I wouldn't trade the breakout. Okay, the back test, not a bad shout. I did add back on, which is why my average entry is actually just slightly under this level. It's not perfect where I'm showing. Screenshot is in Discord somewhere, but I don't have that open as we speak right now, so I'm not going to bother getting that out. I think I also posted it on Twitter as well. But effectively what we had is we came up, we created a high, we came back down, we came back up, we had a little mini swing failure pattern of that high. It wasn't the most convincing high, even I hold my hands up to that, but what we was looking at, you can see here in our daily updates, and this is going back to the 12th. Okay, I was looking for this just to come up, ideally overthrow this, but we didn't get the overthrow. But in the end, we had a little scalp trade, which ended up breaking down, coming back up for a back test of the diagonal, which is where I added back in. And then obviously we've got the follow through to the downside. And obviously since then, as we know, we've come down roughly about 17%. Okay. Am I still in this trade? Yes, I'm still in this trade. I have taken profits, but I'm still in the trade and my stops are now to entry. So therefore, quite frankly, I don't care if price goes this way or price goes this way. That's the beauty of being a trader. Okay, I don't care which way price goes. Would I like it to go up? Yeah, of course I would, because I still hold spot from lower. Okay, would I like it to go down? Yeah, great, because I still make profits on a hedge position. Okay, and that's the beauty of being a trader, rather than just praying that your hodl bags are just going to go up and up and up. Okay, so that's a really simple trade. It wasn't even a complicated trade, this. Okay, the initial swing failure pattern, yeah, a little bit technical. Okay, it's where you get the beauty of order flow, looking for your trap traders. But in the grand scheme of things, the simple pattern worked in the end. Okay, simple pattern worked, but it's because it's tied into Elliott wave theory, and it's not just a standalone pattern. Okay, if you got this shape somewhere random in the chart and it looked like a diagonal, but it didn't work as a diagonal in terms of Elliott wave count inside, I would not be trading it. Okay, but when I get a structure like this in the right area, then it makes a little bit more sense to look for a trade on the back of it. Okay, so that's that. Now, obviously, if you do want those real-time updates like these, then first and foremost, come over to our website, spitfiretraders.com. Links down in the description. From here, you get a bit of a snippet to what's inside the group. But if you click on the Join Us tab, or Join Now tab, should I say, then it'll cost you the grand old price of 79 Great British Pounds, or in dollars, that's roughly about $100. Okay, from that, you get access to not only our daily trading plans, along with the private Discord, but you also get access to our complete portfolio of educational modules. Now, you can see here is today's daily trading plan that's just been uploaded for the members. You can see everything that we have. So obviously, if you do want to learn things like Elliott wave theory, like what would have helped you catch that trade rather than long in the top like all the other influencers told you to do, then you've got a full breakdown of Elliott wave theory in here. Very simple to understand. The way that I teach, I try to make it as simple as possible, and each module builds upon the last. Okay, each module builds upon the last. So therefore, nothing is overly complex as you walk through this. Now, however, if you are coming into our course from a background of trading and you just want to touch up, for example, you might want to learn Elliott wave theory, you might want to start to understand some advanced order flow, then all the modules are there. Okay, so you can start at the beginning, or you can start at the more complex things as you move through it. Now, that's out of the way. What am I looking for next? Okay, it's quite simple. It's not really much different from last week's update. Okay, so first and foremost, let's talk about upside. Okay, let's throw this back on a 4-hour chart. Okay, upside. If we manage to successfully reclaim this level here, now this level ties in with the previous, let me just throw this in, all-time high. Can I attach it? Can I help? There we go. Right, magic. Attached it. 4-hour. There we go. If we can manage to successfully get back above this and reclaim this level, then we can start looking at contesting these highs. Now, once again, at these highs, it becomes very simple for me as a trader, because all I'm looking for is A, do we swing fairly at the highs and get another retracement? Or B, do we continue up? And if we do continue up, we are still, for me, within this sticky zone. Okay, and this sticky zone for me goes roughly, and again, this is on the Bybit chart, up to 77,000. Start to get above this level, and then we can start looking at some higher prices. Okay, but while we are underneath or through this red zone here, this is a very important sticky zone for me. So that's to the upside. That's really simple. We need to flip that previous all-time high, and if we can flip that, then we can start talking about contesting the current all-time highs. Okay, so that's to the upside. Now, what if this continues? Oop, I went back too far. I always do this. What if this continues to roll over? Well, if this continues to roll over, then once again, we do what we did last time, and we get a volume profile. In fact, we'll do this one. Got a volume profile from aiming it from the 25k roughly lows back in September 23, and do this, and then we can see now our most important levels. So if we do continue to roll over, okay, first and foremost, we've got a key low down here. Okay, at 59k, something that you've got to be aware of. Do you come back below that and get a little cheeky swing failure pattern for more upside? Yeah, potentially there's a potential long trigger there if you see that strength. If you don't see that strength and it just starts to roll over, then first and foremost, we can start looking at this zone here, because we can see we've got a high volume node within this. And this is coming in roughly around 51.5k for easy numbers. do we get a reaction in this zone? Yes, cool, great, got a trade. If we don't get a reaction in this zone, we let it come down lower. And if it is going to come down lower, then the next major region to be aware of is where this point of control is. So this is coming in at 42.8 to 43k. This is a major zone. If you are overall bullish, ideally, you want this zone to hold. Okay. Now, if this zone does hold, once again, see that strength? Great, it's a long trigger. If you don't see that strength there, let it roll over further. And ideally, if it does roll over further, you don't want it coming back below that level there. Now, if you are part of our members, you will understand the reasons why you don't want it coming back below that low there. So it's not going to look very healthy. And then you'll also understand what my lower targets are. But ideally, you want to keep above here. So if you are bullish, this zone, ideally, at the lowest, needs to hold. But it doesn't have to come down here. Again, all I'm doing is I'm looking on the chart and I'm trying to figure out where I'd like to take a trade if price went there. No hindsight shit, no crystal ball shit. I'm not telling you where the market's going. I'm saying if it comes into these zones, then I'm interested in the trade. If it gives me the sell, okay? If it doesn't come into those zones, not a problem, okay? So that's it. That's the upside, that's the downside, and that's all there is to talk about. Obviously, if you enjoy this free content and you want to see more of this free content, hit that like button. Let me know down in the comments. And if you're not subscribed, consider subscribing. And until next time, gang, as you were, bye-bye.